Hi, my name's Ed Merryman, and for going on 15 years now, I've been proudly serving Maryland residents with their mortgage and real estate financing needs. Over the years, I've been asked a lot of questions about the process of obtaining a mortgage, about terms that are used in the industry. And I thought it would be useful for my friends if I did a video series on questions about the mortgage industry and the terms that are used, so to shed light on that and that you might be more comfortable in what for many people is their largest purchase and acquisition, the buying of their home, and the mortgage behind that makes that possible for them. I welcome your comments on this video below. And if you have questions, please post them so I could do a further video and help with that question that you might have. So let's just jump right in. What is the first thing that you're going to be asked to provide when you go to buy a house is a mortgage pre-approval letter. There are a lot of misconceptions about what that might be and what it isn't. So let's start with the largest and most important part. A mortgage pre-approval letter is not a commitment from a bank to lend. It is not a guarantee of financing. Well then, if it's not that, what is it? A mortgage pre-approval letter is a preliminary review of your qualifications to determine if you can qualify to get a mortgage. There are two major benefits to a pre-approval letter. The first is real estate agents will be more willing to work with you. Why? Because they know that you've already been checked out by a mortgage professional like myself to see if you will qualify for a mortgage. Secondly, you have an advantage when you will put an offer in, a contract on a house. Why? Because the seller knows that you've done the due diligence to be checked out to make sure that you will be able to get financing. So, what's the process of getting a pre-approval letter and what do you need to do? The first thing you do is you contact a loan officer, a mortgage professional like myself. They're going to ask you some things. They're going to ask you to review your credit history. They're going to ask you about your employment and the likelihood that it's going to continue. They're going to take a look at your income. And lastly, they'll take a look at your income versus your monthly debts. These are the major areas and points that you need to check out to get pre-qualified for a mortgage. After this, you have a lot of edge on the competition. You know how much you can afford to borrow, which is great because it narrows down the homes that you look at. There's no reason for you to waste your time and look at homes that you can't afford. And to your surprise, you might be able to afford a lot more of a house than you thought you could before. Another good reason that the mortgage pre-approval letter shines light on things is that in the process, your mortgage professional gets to look at any points that might hold you up in the underwriting process, whether it's your credit history and delinquent payments, whether it's a lack of income, maybe you haven't been employed long enough. These areas that could trip you up in the underwriting process are revealed during the pre-approval process, and it allows you to be proactive in taking care of it before you're wasting your time and before you're spending money needlessly. It's a huge benefit. Thirdly, once you're pre-approved, in a hot market, it makes you stand out, showing that you've done everything that's necessary and you are ready and able to buy a home. Lastly, once you have your pre-approval letter, while it's not a commitment to lend, there are some things that you should not do until the mortgage process is completed. A, don't take on any new debt. No new auto loans. Don't go out and buy furniture for your new home and enter any financing agreements or anything like that that might change your debt to income ratio. Secondly, don't make any large purchases or buy anything large either that might deplete your assets that are needed for your down payment. Because in the underwriting process, you're going to be asked to prove all of those things in the funds that you have available. Things you do want to do. Continue to make your monthly payments on time. Also, if there's any change in your employment or its likelihood to continue, contact your mortgage professional about that and let them know to make sure that it's not going to trip you up in the underwriting process. I hope this was informative and helpful. If you have any questions about the mortgage process, please call me. My number's on the screen. And I hope you look forward to more videos in the future. This is Ed Merryman signing off. Take care. Bye-bye.